Hi everyone, let's only look at my preferred scenarios on the macro, high time frame, medium time frame and the low time frame, starting with the macro time frame where I'm looking for a 1, 2, 3, 4 and then a wave 5 to the upside, with the main target area being between 98k and 174k. The main reason for me this is my preferred scenario has to do with this wave 4 over here. This wave 4 is nice and long in time compared to this wave 2, because usually and by far most commonly wave 4 takes more time to form than a wave 2. And if you put the high of this wave 3 over here, the low of wave 4 over there, and then the all-time high being the wave 5, the main problem is that this wave 4 over here is very short in time compared to this wave 2, which is not what you want to see, as by far most commonly, as mentioned, wave 4 takes more time. And in this scenario, this wave 4 is a complex structure, which is a WXYXZ structure. Also, additionally, wave 4 closed multiple weekly candles right on top of the 0.5 fib, taken from the low of 2 to the high of 3, which is the maximum target for wave 4. The exact week low over here was made on top of the 0.618 fib time, taken from the low of 2 to the high of 3, so that is nice extra confluence. And we also had an important volume peak at the lows, which can signal a reversal area, just like it did with the low of wave 2 over here. We had high volume during this dump, and that was the beginning of a big move to the upside in a wave 3. I have two potential trading setups over here. The first one was already in the past because that was entering down here, thinking this is a wave 4. High time frame candles are not allowed to close below the 0.5, so you could enter right on top or just above the 0.5, stop loss safely above, trading it to the upside. The more safer approach, I would say, is waiting for a bit of a retracement, entering with the longs, and then stop loss is below the low of this wave 4, as that is the clear invalidation, and then trading it to the upside. If we then go to my preferred scenario on the daily time frame, the high time frame, this is what I'm currently looking for. So again, this of course matches the macro time frame with the bullish scenario, where this is the low of wave 4 and we're now looking for more upside. The corrective structure is a WXYXZ, which is basically a three wave, another three wave, then again a three wave, and finishing with wave Z, which is also another three wave structure, which then is the end of wave 4. If we look at the impulsive structure that we currently have on the chart, in my opinion, it would be nicest if wave 1 is ending over here, with this structure being a 1, 2, 3, 4, and then this is wave 5. However, the alternative is this being a 1, 2, 3, 4, 5, wave 1, wave 2, and then this is another 1, waiting for another 2 before launch to the upside. However, in this particular scenario, the reason I like wave 1 to be over here is we have an important support resistance area that we haven't backtested for a very long time. So it would be nice to reject over here for then a potential wave 2 to the downside. If we look at the volume of this impulse, so far it's looking very good. Wave 3 over here has the highest amount of volume. And if this is a nice wave 5, then you can see we have less volume over here in this wave 5, which is exactly what you want to see between a wave 3 over here and a wave 5 over here. Now in this scenario, the high might already be in. However, as always, basically with Elliott waves, one is laddering potential shorts in this scenario to the downside, stop loss safely above, trading it to the downside. Then where the most common targets are basically between the 0.5 and the 0.786, which is basically between 21.1k and 17.7k, with by far the most common target being the golden pocket over here, which also has nice confluence with these lows for then a potential liquidity grab right on top of the golden pocket for then a long setup to the upside, where one can enter shorts in this area over here, stop loss below the low, as that is a very clear invalidation, and then trading it all the way to the upside towards the high time frame macro targets. If we then go to the medium time frame and show you my preferred count on the medium time frame, we have over here the 5 wave count on the chart, the green 1, 2, 3, 4, and now basically finishing this wave 5. If we then zoom in, I believe that inside this wave 5 we might have an extended wave 1. And the extended wave 1 is the blue count over here. So we then have a blue wave 1, a 2, a 3, a 4, and now looking for a 5 to the upside over here. We already hit the most common target area for wave 5. However, let me explain this scenario just a little bit so you understand exactly what I'm looking for. With an extended wave 1 impulse, we have a wave 1, 2, 3, 4, 5 inside this wave 1. This is the most common target area for wave 2 if wave 1 is extended. So it's between the 0.382 and the 0.236 Fibonacci from the low of 4 over here to the high of this wave 1. As you can see, price went into this area, moved to the upside, which is very nice. In this scenario, however, wave 3 does not have a target. Wave 3 doesn't have a target because it's mainly wave 5 that has a target. And the wave 5 target for an extended wave 1 impulsive structure is between the 0.618 and the 0.786 trend-based fib extension taken from the low of 4 to the high of 1 to then the low of wave 2. So that is actually very important. So this area over here is the most common ending area for then this green wave 5 in an extended wave 1 impulse, where if we look towards this wave 4 ended between the 0.382 and the 0.236 Fibonacci taken from the low of 2 to the high of 3, which is also the most common target area for wave 4 in an extended wave 1 impulsive structure. In this scenario, as this is the target area for wave 5, the potential trading setup is basically entering shorts in this area over here, stop loss safely above, trading it to the downside. And what I also like about this target area is that we do have some nice confluence in here. So I would actually personally like for price to move up still a little bit further, because we have a weekly naked point of control and a weekly level over here. And I believe this would be brilliant for then a move to the downside. If we then zoom into this particular scenario to the 1 hour time frame and have a look at what has been going on basically the last couple of hours and the last few days, we have the low of wave 4 over here. This structure, however, is very difficult to count. We will see in the future what we can make out of this structure, but for now this actually over here is not really important. Yeah, wave 4 could have been finished over here or here, but it is mainly about the impulsive structure here on the chart. So currently one could say 1, 2, 3, 4, 5, with then the end of wave 5 already being here. However, I don't really like this to be the end of the blue wave 5 and then the green wave 5, because we didn't really have any sort of great confluence. Yes, we did have a time naked point of control right on top of this level, but I mean these levels are so much more attractive as well. So yeah, I would personally think this is a 1, 2, and then this might be the high of a wave 3. Then we have a corrective structure in a wave 4 before eventually moving up for wave 5 to hit these targets over here and move to the downside. However, with a trading setup, as with Elliott waves, it's most common to ladder into positions. One could enter a short, another one, and all the way up in this target box. Stop loss safely above with proper risk management, a good strategy, and a strategy that you have developed yourself, and then eventually trade it to the downside in this scenario. So I hope this video was helpful or valuable to you. I'd like to thank you for watching and subscribing, and I will see you at the next one. Bye bye.